Hi everyone, we're covering problem 3-1A. A couple quick notes. This will be good to practice for your homework, which is going to be 3-2A. And I will be pausing, so you'll see me starting and stopping. This is just so that I can condense time. Okay, so in this problem, Logan Krause started her own consulting firm, Krause Consulting, on May 1st, 2017. And then here it says the trial balance at May 31st is as follows. So we will be working from the trial balance. Okay. What we will be doing is we're going to take the data here that they give us. This is additional data, and we're going to be making journal entries so that we could adjust the accounts. So these are going to be known as adjusting entries. You will happen to notice, if you look right here, it says in addition to those accounts listed. So there will be new accounts that are going to show up, okay? And then after we've populated the journal entries, we're going to post those entries to the respective accounts, and then we're going to take that information and we're going to populate the adjusted trial balance. So we're going from unadjusted, we make adjustments, and we go to the adjusted trial balance. Number one, $900 of supplies has been used during the month. Okay, so I'm going to point something out real quick. They're either going to tell us what the expense is, or in this case, the amount used. And then there's also going to be a time when they're just going to give us the ending balance, and we need to subtract the beginning from the ending to find the change, or what is used, or what is the expense. So we're going to, in this case, directly use the $900 in the journal entry, okay? So if we have used $900 of supplies during the month, that means we increase our supplies expense and we reduce our supplies inventory. So we're going to debit the supplies expense and we're going to credit the supplies inventory to reduce it. Okay, so we have supplies expense debited 900 and supplies credited 900. Okay, utilities expense incurred but not paid on May 17, 2017 for $250. So in this case, it doesn't matter if we actually use cash or not. We have an expense, but we owe somebody something. So we have a payable. So we're going to increase the expense with a debit and increase the payable with a credit. And so as you can see here, we've increased the utilities expense and we've also increased what we owe somebody with a payable. Okay. Number three, the insurance policy is for 2 years. So let's take a look at it here. We have prepaid insurance of $3,600. So what we're going to need to do is actually divide into the $3,600 24 months so that we can get the monthly costs and then adjust for it. Okay, so I've put the entry in, insurance expense, we've increased the expense, and we've also decreased our prepaid insurance. But let's see why. So the insurance policy is for 2 years, okay, so it's 24 months. And we have $3,600 in the prepaid insurance. Now let's go a little bit further up. It says Logan Krause started the firm on May 1st, and we're looking at the trial balance at May 31st. So it's only 1 month later. So in that case, what we need to do is adjust for 1 month of prepaid insurance and 1 month of insurance expense. And we've increased the expense and we decreased the asset prepaid insurance. Number four, $400 of the balance in unearned service revenue account remains unearned at the end of the month. So they're telling us what the ending balance is. Thus, we need to find out what the change is. So let's go look up here, and we see that unearned service revenue has 2,000 in the account unearned, which we owe someone, but now we know it's only 400, so we have a $1,600 change. So in this case, what we're going to do is decrease the unearned portion, the liability, by 1,600 and increase or recognize the fact that we have earned this service revenue. Okay, so we've decreased the unearned service revenue with a debit, we've decreased the liability, and we've increased or recognized the service revenue with a credit of $1,600. Okay, number 5, May 31st is a Wednesday, important part to this puzzle, and employees are paid on Friday, another important part. Kraus Consulting has 2 employees who are paid $920 each for a 5-day work week. So what we need to do here is we need to adjust for the remaining days in May. So that's only 3, right? Monday, Tuesday, and Wednesday, and then they are paid on Friday. In this case, it's June. They have 2 employees, so we have to look at it from the perspective of 2 employees. Okay, I've created a spreadsheet here for us to look at. So here we have salary for each employee is 920. There are 2 employees, okay? We have the number of May days worked in this week are 3, and the number of days in a work week are 5, right? And it's the end of the month, so we're only recognizing Monday, Tuesday, and Wednesday. So that's 60%. So watch this. If we take the employees' salaries each, get the whole amount for both employees, and then multiply it by this 60%, we get 1104. Let's take a look at what we did here. We incurred salaries expense even though we didn't pay them, so we have to pick up the expense with a debit, and we also must recognize the fact that we owe them, so we increase our payable with a credit of 1104. Okay. Number 6, the office furniture has a 5-year life with no salvage value. It is being depreciated at $190 per month for 60 months. So in this case, we're simply just looking at the 190. So here for the depreciation, we're only concerned with the 190 because they're actually giving us the answer that this 190 is on the per month basis, so we don't need to do any math. We need to increase the expense with a debit, and we also need to increase the contra asset, accumulated depreciation, specifically for equipment, with a credit. Okay, number 7, invoices representing $1,700 of services performed during the month have not been recorded as of May 31st. So what do we need to do? We need to record it. So we're going to increase the fact that you owe me the accounts receivable, and we are also going to recognize the fact that we earned this revenue by increasing service revenue with a credit. So we've increased the accounts receivable with a debit of 1,700, and we've also recognized the service revenue. So we increase the service revenue with a credit of 1,700. Okay, so now we're going to look at the posting portion of the assignment. So we're going to post the above adjusting entries to the ledger accounts. And as you can see here, there's the account names, cash, accounts receivable, supplies, all the way down to utilities expense. And let's also take a quick look at this. We have the explanation here. We do have a date, but we have the explanation here letting us know whether it's in a balance or it's an adjusting entry. So what I'm going to do first is I'm actually going to populate the balances in the accounts that have balances. So let's go look at the trial balance and look, cash, accounts receivable, supplies, all the way down to rent expense. They all have balances right now. So I'm going to take these account names and these account amounts, and I'm going to populate this portion right where it says balance. So wherever it says balance, just enter the balance. Okay, so I've populated the balances in each of the accounts here. right? So cash 4,500, accounts receivable 6,000. If we go up here, cash 4,500, accounts receivable 6,000. But now let's also take a look. Let's scroll down just a little bit. You'll see we have equipment here, which does have a balance, but then look, accumulated depreciation does not yet have a balance because we haven't made the adjustment yet. So there's no balance here. And then accounts payable does have a balance, unearned service revenue has a balance, and owner's capital, the service revenue, and let's see, and the salary and wage expense also has a balance, and rent expense. Okay, now we're going to enter the adjusting entries. So how do we enter the adjusting entries? We simply take the information from the T account, supply expense 900, and enter it down here in the supply expense section, right? We're going to have a debit and then we're going to have a balance, but then also we're going to take the credit side of it, right? We have two sides to every entry, supplies, and we're going to decrease our supplies inventory. Let's take a quick look here. Okay, so the supplies expense, we've increased the expense with a $900 amount, and we've also increased the balance. And then let's go up above here. We adjusted the supplies inventory with an adjusting entry of 900, which reduces the amount of supplies that we have on hand. So what I'm going to do for the rest of this part here is I'm going to just follow the format. Utilities expense, I'm going to make a debit entry for it. Accounts payable, I'm going to make a credit entry for it for these amounts. So take the debits, go down below, and enter them into the accounts below. So that's what I'm going to do and populate all of them now. So let's take a quick look. Utilities expense and accounts payable go up. Utilities expense goes up 250, and so does accounts payable. So let's go to utilities expense. All right. There we go. The debit 250, increase 250, and the accounts payable 250, and look here, the balance increase. So you're going to do that for each of them. What I would suggest is following each of these down based on the debit and the credit, and you'll see the answer populated. For instance, let's just skip down. Salary and wage expense 1104, and the payable 1104. So we're going to pass the payable on the way down. All right. The payable increase, credit 1104, balance 1104. And the wage expense 1104, debit, we need it to increase it, and it increases the balance. So follow that format for the rest of the adjusting entry portion. Now we're going to go down to the adjusted trial balance. We're going to take the information from above and simply do nothing more than populate it into here based on the flow here. We're going to start with cash, accounts receivable, supplies. We're going to go all the way down, and we're going to end with utilities expense here, and we're going to populate everything right here. Take a quick look here. I've entered cash 4,500, accounts receivable 7,700. Where'd I get those amounts from? Right here. Cash 4,500, accounts receivable 7,700, the adjusted balance. So you need to go and take the account and the final adjusted balance for each one of these. So if we flow down, all the ones that have been adjusted have a balance. Service revenue here 12,800. Let's go down here. Is that what it is? Yes, it is. Salaries and wage expenses, is it 7,504? Let's see. Yes, it is. So that's all that you need to do to complete this part. And then the last part is you just need to add each column up, right, to get the total for the debits and the credits, and they should equal each other. Okay, so they do equal each other, and everything is good because we have a check mark here. Let's take a quick scroll down from the top. After we've entered everything in, our journal entries look good. Our posting entries to the accounts look good, and all the balances. Our adjusted trial balance looks good. And basically, the last item here I just want to point out is if you have trouble, you can click here for the accounts, and you can also see a similar problem or link yourself to the text. All right, good luck.